leaving for our destination, I still don't know. Somewhere nobody must have duties at all. And if you like this, you can follow me. So let's go. Follow me. And let's go to the place where we belong and leave our troubles at home. Come with me. We can go to a paradise of love and joy, a destination unknown, no, 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 destination unknown. The crowd, the air is clean, your ocean's blue. I love that sound. We're happy for this destination we found. And if you want this, you can follow me. Let's go. Follow me. And let's go to the place where we belong and leave our troubles at home. Come with me. We can go to a paradise of love and joy, a destination unknown, no, 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 no.
Just feels tight. Just feels tight. just feels tight.
All night, we ain't here to hurt nobody. So give it to me, give it to me, give it to me. Wanna see you work your body. So give it to me, give it to me, give it to me.
Boys in the party, everybody put up their hands. I get a half a mil for my feet, you get a couple bricks. Never gon' see the day that I ain't got the upper hand. I'm respected from California, I ain't way down to Japan. I'm a real producer and you just a piano man. Your songs don't top the charts, I heard them, I'm not a fan. Niggas talking crazy, I'm the one that gave them their chance. Somebody need to tell them that they can't do it like that.
You've probably heard this many times before. You have the potential to do anything you want and to become whoever you decide to become. You are capable of fulfilling all of your dreams and desires, every single one of them. You're the only one who can stop yourself from succeeding in life. Now that you have been told it is possible you can achieve whatever you want in life, do you believe it? Do you believe that it's possible for you to create your own dream life? Not the life that you were given when you were born, but your own dream life. What's stopping you from achieving it? What's stopping you from turning your dreams into reality? A recent study reported that over 50% of Americans hate their job. Over 50% hate what they do for the majority of their time on planet Earth. They wake up in the morning knowing that they have to go to a job that they hate. This is not only happening in America, it's happening all around the world. I think deep down, all of these people know they are capable of living a better life, capable of earning better money and doing things they enjoy if they are willing to work for it. But what stopped these people from living their dream life?
All right, guys, there it is. It's Scrooge's Gold Vault. It's open. We're ready to get some gold. We're ready to trade. Guys, it's Money Monday. I hope you guys had a good one. I'm excited to be back. I just got back from vacation. It was definitely an elongated vacation. I ended up staying an extra day or two that I didn't want to stay due to having a flight canceled and having some issues with the airline. So anyway, happy to be back. Really glad to be back here. We're going to run it straight through now. There's really no stops all the way until the end of summer, except for in about 3 weeks, I have my birthday and I'm going to Puerto Rico for a couple days. So we'll be on break for a couple days in July. But other than that, we got all of July, we got all of August, we got all of September. And by September, we are going to be 100% richer in our spread account. We're going to be killing it. By the way, I'm going to be throwing down approximately $10,000 of my own money into some accounts. I'm going to be shorting along with deck. I'm going to be continuing my futures journey. I'm actually starting my evaluation on Monday. There's just so much coming. I'm really, really excited for. So, yeah, let's go ahead and run it down. So, Scrooge's Gold Vault. My name is Scrooge Max Bucks. You can find me over there on Twitter Space. I'm gonna always call it Twitter. I'm not gonna call it X. It just sounds seedy and wrong. No, I don't know. I'm just old school, I guess, right? So, basically what we're going to do every day, guys, is we're going to break down 4 main things. We're going to be doing short squeeze plays. We're going to be doing swing trades. We are going to be doing straddles, which, by the way, we got a straddle today, guys, that we're going to be going over. So I'm really excited to do that with you guys. And then we normally finish the show with a nice end of the day, 90% success rate credit spread that can double your account within 40 trading days or 90 actual days, depending on which one's longer. And yeah, basically going to make sure that we get you guys where you're going with all of that. So let's go ahead and get this show started. So the first thing that we're going to go over today, guys, is we're going to go over the short squeeze plays. Now, if you guys love GME, if you guys love AMC, if you love ABC and BBD. No, if you guys really want to know about short squeezes, if you guys want to understand a little bit more about how to create a watch list, how to identify when they're actually breaking out, and then also a handful of ways of how you can play these things, I put together a short squeeze masterclass. It's in the video section of Tradecaster. It's in the video section of YouTube. So you guys just go to the video section there and you'll find the masterclass. It'll teach you, like I said, 5 different, right around a handful of different ways to play short squeezes. It's going to tell you how to identify them using screeners, I'm sorry, how to make a watch list using screeners, and then how to actually identify the movement in order to get ready to play them. them. So without further ado, here we go. So I do have the FinViz screener up. The only thing I've changed from float short is the fact that they are in fact optionable. That just gives me a leg up, right? It allows me to know which one of these plays are optionable. But the second big step of this, guys, is not just identifying the breakout, it's finding plays that have high volume on their options. So if you go into their options chain and you look up and down and you look several strikes away in either direction and you start seeing these really big differences between the bid and the ask, that means the buyers and the sellers just aren't agreeing on the price. And that indicates low volume, because what's going to happen is if the buy side and the sell side get enough people, those lines are going to keep pushing closer and closer and closer together, and eventually they're going to meet and we're going to get a nice spread, like when you guys trade SPY or SPX or any other high volume, like one of the top 5 of SPY. Like, so if you're trading Google or Meta, or lately I know Tesla and Microsoft have been nuts. So if you're trading those companies, then you're going to not really run into this problem very often. You're going to definitely be okay. But when we're creating lists of short squeezes, you don't know these companies. So the best thing that we can do is, let's say right now we're just going to go ahead and take SPWR for example. Let's go ahead and go over to our broker, SPWR, and let's just take a look at it. And this, I have found, I mean, don't get me wrong, there's definitely ways for you guys to track volume other than this. But since I'm already here and I'm just setting it up, it's easier for me to just kind of do this, right? So if we're going for a short squeeze, I would always say about 3 weeks out or more. You want to give it some time to run its course or do what it wants to do. And what we notice here right away is that there is some really bad volume on the put side here, or let's say this would be the call side. Yeah, this would be the call side. So we really just don't have good volume on this play, even right next to the strike. So let's say right now we're looking at a option play here that is actually in the money right now. Okay, so $2.50 for 3 weeks out is in the money. You would think that it would be worth all sorts of money, but that's where these breaking it down this way and running it down and actually looking at these things is going to really help us long term. Okay, it's going to make it to where we're like, okay, well, this isn't even a play I want to be in, because even if the price came up a little bit, so initially you would look at this and say, okay, like a $4 call option here is really cheap. But even if it jumps up to $1.50 and you're in the money, how much higher is it really going to go? So not only can you see volume through this, you can kind of give yourself a chart of how your profitability might go. Now, I know that there's options calculators, and I feel like that's a much better way of doing this, because all of this stuff you're looking at can change based on a few variables of the Greeks, right? So this isn't necessarily a Bible, but this is something that I like to do when I'm getting into an option trade. I just like to go up and down a few strikes and say, okay, is there good volume? So in other words, if the price moves a little bit away from where we are or a little bit close to where we are, am I going to get a good fill? Am I going to be able to get out? Because I'll tell you, one of the most frustrating things about buying options is when you get into a low volume play and you wake up the next day and you could either be down a lot or you could be up a lot. And you think to yourself, man, I better just get out if I'm on the bottom side, or hey, let me go ahead and take my profit if I'm on the high side. And you go ahead and set your order in there and it's not going to fill, guys. It's just not going to fill all day long. It'll just sit there. Or if it does fill, it's going to fill at a very unfavorable amount for you and might steal a lot of the profit that you worked really hard for, right? So being long-winded, but the main point here is avoid these type of plays. Here we are. Okay, so we want high option volume. So you use FinViz, you use the float short to give you an idea of which ones are about to pop. Now, is the one that's at 53% more likely to pop quicker than the one at 30%? No, that's not how these work. They're going to be different times. So you really just want to focus in on them and just keep watching them. Personally, the way I like to play them, because I don't like to try to guess when a breakout is happening, I like to actually see the breakout already, let it hit a previous high, and see if it can beat that. And if it can't beat that, then I personally, the way I love to play them is I put them on back down. So here's a play right here that's kind of on a little bit of an uptrend, and it looks like it's going to be being tested here. So let's go ahead and take a look at it, right? So we got ABR. All right. All right, so we see from ABR is exactly what I'm talking about. Here's a level that it was at last time and it rejected. Here's a level that it was at just previous, like, within a week or so, and it rejected. It was at that level not that long ago and rejected. So we had one, two, three different put opportunities from this same level. And you know what? We had more than that because it hit it here again. So multiple opportunities from that level. So now we're at that level again. It's kind of a break it or fake it or not going to make it. There you go. Break it or not going to make it. That's your two options right now. So this would be something that I would absolutely be watching for puts on the way back down, if only if we see some volume. So let's go before we even add it to a watch list, before we spend time, trying to dial it in. Let's see. Here we're 3 weeks out, and what do we got here? Terrible volume. So here's stuff, like I said, that's in the money right now and technically should be worth a lot. But we have the buyers and the sellers who just don't agree. The sellers are saying, look, we want this much. The buyers are saying, well, we only want to give you this much. And when you have that much of a difference, this makes option buying very difficult. And this is why a lot of people will not even touch short squeeze plays. But I believe that through looking at these things through a long period of time, that not only are you going to get really good at identifying them on the charts when they're taking off. Now, what am I talking about when I say identifying on the charts when they're taking off? Well, if you guys have not watched my short squeeze masterclass, I strongly suggest you make your way over there. But for now, since you're here, let me just show you what I got for you. So we're going to have multiple legs up on a short squeeze. Okay. Let's come back over here. I think this was pretty good. Okay. So you're going to have multiple legs up. Okay. So we're going to start, let's say, from right here, because at this point we were consolidating and there was no guarantee anything was going to happen. So the first leg up was your indication that, okay, it's squeezing. We broke past all the previous times it got bounced down. It's showing momentum. Plus we have the metrics behind it of our, of the fact that it is in fact a short squeeze, right? So that gives us the extra indication that it's going to rip. So you wait for it to fall back down and get rejected. Once it breaks that line, that's when it's off to the races. And that's when a lot of people would enter calls or enter positions and go ahead and ride it as high as they can. I personally wait for that momentum to stop and start slowing down, right? And then once you've seen a huge rejection candle right around here, this was your indication that it might be done. And this would have been a good time to grab a put. Now, if it would have kept going, well, that's why we're three weeks out, right? So even if it goes on just a little more, hopefully it's going to come back down in that amount of time, because what we notice about these things is they have a tendency to plummet back out right when they're done. Well, this guy said, well, look, yeah, we dropped, but we're not done yet. And it jumped again. And once it broke this line is when it was bullish again. However, it was very short lived on this one, where we got a huge rejection and a reversal. There's your put opportunity. Now, what happened over the next couple that day and that overnight? Well, the put didn't necessarily do much. It probably even lost some money by that next morning. However, what happened immediately at the opening bell, your put would have printed. Within an hour of the opening bell, this movement alone would have been enough to make the put that you got up here worth some money. Okay. And that's why I personally like catching them that way. Okay. So you guys spend some time with this. Definitely go through this screener. You can add all of these to a watch list if you have a paid subscription to TradingView, or if you use something else. Personally, I got to be limited in what I'm watching. So I kind of just use this chart and I'm looking at stuff, right? So when you look at this chart, you want to see stuff that's big candles, lots of swings, lots of chop, or, lots of movement that's going to give you, that shows high volume, and that shows you that, you could really get lucky on these and make a lot in just a little bit of time, right? So you got PLCE is absolutely tanking right now. It did what it was supposed to do, but we're a little late on that one. Same thing. This one, about 4 days, 5 days too late. For the past 4 or 5 days, these are daily, by the way. For the past 4 or 5 days, Riley's just been dumping. So if you owned a put through that and you were 2-3 weeks out, you would be printing right now. You'd be so happy if you had those diamond hands, right? Okay, same thing with MAXN. We got about 3-4 days of nasty red, so you're missing that. So we're just going to wait for another green spike, another come up, and then we'll try to get it back down. Now right here, fat looks good. Fat looks like it's going to be testing some old levels. So this will be the last one we look at, guys, because we need to move on. But I did want to go ahead and just do one more. Okay, so we got fat. Where are we at here? Let's move. There we go. Okay, so it's definitely testing some old levels right here. As a matter of fact, this was a big resistance right here. This shot it right back down, right? So yeah, and right here we kind of had that same shoot down, shoot down, shoot fail, shoot fail. So when it comes up to this here, it loves to shoot on back down. So fat would be one of these that we'd definitely be looking at. Once you see a nice reversal or something that indicates that it's, maybe if you put some VWAPs up there and it cracks the VWAPs, something to indicate that it's going to go ahead and dump. Or, you know what? We're 3 weeks out. We're at previous resistance levels. Go ahead and grab the put now. And then worst case scenario, it starts busting and it actually gets through this high of $2.28. Maybe you're down a little bit. Maybe you go ahead and just close it because you're thinking, okay, now it's broken that. It could take off to the races. Or maybe some of you are just going to double up and go ahead and get another put at a strike that's a little bit more favorable for you and let them both run. It's up to you guys how you want to play these. And if you guys have any questions or any more, examples or anything that you need me to go over with you guys to understand this a little better, just let me know. But it's just like with deck and shorting. What goes up is usually going to come on down, especially when it's being short squeezed, which means that there's a lot of pressure on both sides. But when it ran and it finally popped, the idea of, could it come back down? Well, yeah, it obviously does more than most of the time. You can see at the top of every one of these crescendos, it comes back down. So every once in a while, you're going to be wrong and it's going to shoot on through. And, you can actually buy some shares at the same time as you buy the put to kind of hedge your position a little bit. I'm cool with that. Like if it is at one of those highs and, hey, maybe it's going to pop. But, that way you can get out of the shares anytime if you see you're wrong. And then wake up the next day and your puts it, printing and you're making all sorts of money. So that's it for the short squeeze, guys. We're going to go ahead and move on. Okay, so the second thing that we like to do here on the show is we do the swing trades. So how we do the swing trades is I watched a video by Deck back in March last year, and it basically just showed me some filters that I can use on FinViz, and he suggested this basic layout. And I plugged it in, guys, and it was like magic. Okay, so first of all, buying options is not something that you're going to be very successful very often. I was getting 70% success rate. Second part, buying options as a swing trade is even harder to be more successful more often or have consistent wins because you're holding them overnight. I was getting close to 70% success rate with holding with swing trading with what I'm saying is one of the hardest things to do. So I mean I would say it almost felt like magic when I plugged this stuff in because all of a sudden I went from a 30% win rate if I'm lucky on buying options to more closer to like 2 out of 3 we're hitting. And I was testing, so I was able to watch some of these things throughout the whole process, and some of them actually went up to 100%, 200%. Some of them I woke up to like a nice 70% or 50%. But what I was doing was a 30% stop loss and a 30% take profit on both sides. And it was good. It was working really good. You guys could modify this a little bit. So anyway, real quick, this is what we were looking for. Change from open is down. The performance is today down. And the RSI is oversold. So all of this is indicating that it's a very beaten down stock, okay? The relative volume over 1, I like that, but it's not necessary. Sometimes not having that on is actually better. I probably am going to change that a little bit because we're going to look at the volume of the options anyway when we look at the option chain. So that part really doesn't matter too much, right? And so we come over here. Now, the things that don't change when we do the put side or the call side is the price over $20 and the optionable. So we want it to be optionable. Obviously, we're doing options, and price over 20 just means we're not doing any small caps. We want some good, at least somewhat decent stocks there that we're gonna trade. All right. So the one thing that's different here, what is different to you guys? What's standing out? It's these insider transactions because the insiders are starting to add to their positions. So even though it's a very beaten down stock and it doesn't look good, the insiders adding to their positions indicate to us that this thing might be turning around soon. So we got 2 great plays here, guys, CTRN, MRCY. If either one of those has good option volume, I say let's go ahead and grab a call. Let's test it out. I am using a test account, so I mean I can just kind of play around a little bit more. I'd like for you guys, if you want to play stuff that I'm suggesting to you, but you're new to the channel and you haven't found success with my methods yet, and you don't necessarily know, please just paper trade first. That way you just have the confidence. After a few weeks or a few months of us winning, you'll be like, oh wow, okay, yeah, I feel good putting some money down now. That's how you guys should always do it, right? So let's get rid of this real quick. Oh, sorry. Let's get rid of that real quick. So I don't want to be able to see it. Okay. So MRCY, like sometimes they say wait for some sort of momentum shift. When I did get in on these guys and I lost, a lot of the times I lost, I was just a day early. So sometimes you want to wait. Sometimes it's not good to jump in right away. That next morning, see if you see some strength and it looks like it's about to take off, and then you guys want to grab it. So first thing you do before you add it to a watch list, though, that way you're not wasting your time watching things that are not even optionable or not going to have that volume that you're looking for. We're looking for 3 weeks to 5 weeks out, somewhere around there on these. No less than 3 weeks, guys. You don't want decay to eat you up. You want to be able to go ahead and get that swing. It might take 2 or 3 days to come to fruition. Normally, it was about 2 days when I was testing it. But anyway, so we look at this real quick, guys, and what do we see? First thing, the option spread, or the amount difference between the buyer and the seller, is so much that we wouldn't get good fills, we wouldn't get good exits, we wouldn't possibly be able to even close our positions depending on how far away we went. Like, imagine you literally just went one strike away and the bid is zero, and you know that your option's worth 40 or 50 cents, but they won't even give you anything for it. So this is a nightmare. This is the kind of stuff you avoid, avoid, avoid. Okay. So MRCY, we cannot do anything with that. CTRN, let's take a look at real quick. CTRN. All right. Same thing, guys. They're not agreeing on the price. So this is going to happen a lot. There's really not too much we can do about that. Just go ahead and just throw them to the side. Don't even worry about it. We're going to have more opportunities. I promise you guys. Okay. So that was for the call swings. Okay. That was, guys, like I said, stuff that was beaten down. There we go. Okay. So now we're going to go to the put side. So it's just going to be the opposite, guys. It's up. Performance is up. RSI is overbought. And I think the RSI is the secret here, guys, because I've done insider tracking before and it wasn't this successful. I think the reason that this particular method is so successful is because that RSI is there to save you. Because even if the insider transactions don't necessarily do anything, the RSI is still overbought. So there's still a good chance it's going to be coming down. So it just increases your win percentage, I think, a little bit. Price over 20 still, relative volume. Let's just do any. Like I said, we're going to be looking at maybe not. Shoo. Okay, so it depends on how many you guys want to look at. If you didn't get anything, let's see here. We're going to go change from relative volume 1 over 1. Okay, so if you didn't get anything on this list, on this short list, you can open that up to any and just spend a little more time looking for something. Now, the one thing or two things that we don't play when it comes to this is if it's a slow gainer, like AGX is a good example, right? Look at AGX. Now, there was a gap, which probably indicates earnings, but the price action doesn't tell you that it's going to go far either direction. Even if it goes up a little or down a little, it's not going to. We want bigger candles. We want something that's got more swing to it. Something that like BBY that has gone up so much would be able to maybe come crashing back down. HIMS, same thing. We got a nice quick, within the last 20 days here, it went all the way up from 15 to 25. So, thinking, okay, if it's going to reverse, we want it to crash down a good amount so our options are going to be worth even more, right? So this is the kind of stuff we look for. Now, the second thing that we don't trade besides the slow trickle up is going to be earnings. Why don't we play earnings? Well, simply enough, just because an insider is getting rid of their positions after an earnings doesn't necessarily mean any insider knowledge. And it certainly doesn't mean that the price could just come turning around. Okay. Basically, all this means is that you are an insider for the company and you're being awarded shares as part of your compensation package for employment. And now you've just seen a price go up to a number that you haven't seen it at for a few months or a few years or ever. It could be all time highs. So that just indicates to us that that's smart. They're getting rid of some of their positions. They're liquidating at that time. It's just a smart move. So any earnings plays, we're just going to give it a little bit of time. So you see that the earnings here is still just kind of figuring out what it wants to do. So we're not going to mess with that one. This one here, not like I said, it's just even if it came crashing down, how much would you expect it to move based on all these low volume candles that we're normally seeing here? So, yeah, I'm not going to really touch AGX. I feel like that one could come crashing down, but like I said, it's not my style. So, earnings play. Now, with earnings, we want it to consolidate. We want it to move. We want it to consolidate. And then we want it to make up its mind where it wants to go. So at this point, this is still telling us that it's breaking out. You know, could it want to get back under this trend line? Absolutely. So, Best Buy, definitely keep an eye on it. If it shows you some weakness, if it starts turning back down, if anything happens to where you just kind of see that like it definitely wants to snap back to this consolidation zone, I'd say grab a put on that thing right away. I'd say watching Best Buy tomorrow at the bell and seeing what it does might be a good idea for a put. Okay, guys? All right, so we're going to come back over here to the screener. Oh, no, we're done with that one. Okay. So, guys, we only got a couple more here. We'll wrap this up. Okay, so this one just same thing. It had an earnings. It's consolidating. It's moving a little bit, but if it comes crashing down, how much is it going to come crashing down? I mean, it's at the high side, but it's not at the top. This isn't how we trade, right? The technical analysis really doesn't matter on these. We really just want to be away from the earnings, which this one is. Oh, I like this one a lot, guys. We got a nice doji candle here. We got a high top shadow. Those two things indicate we could be coming back down. And we're past the earnings. Hims would be a play that I would be very interested in right now. To say, you know what? I think this could come crashing down. Let's see what the options look like. Can we get a put option for Hims? And the options are great. Look at this, guys. If no more than 10, maybe 20 cents in between, hey, we can trade with that. This is really good. And it's a few strikes away, just in case it moves a lot. So Hims, guys, I feel really, really good. Maybe it's going to consolidate here for a couple more days, but just for the sake of doing it, let's go ahead and just take a test here, okay? So let's say we want to do this was okay, we're doing puts on this one. So let's go ahead and close this up here. Oh, it always lags a little bit at the end of the day. Okay. So as you guys see, this is a test account. We are just still testing on a lot of these strategies. I want you guys to do the same. Like I said, I want you guys to feel real confident with this stuff. So put where would we want to be here? Okay, let's take a look at it. Hims. Let's get an idea of where we think it's going to come to. Okay, so right here we got a moving average right here at $23. So I'd like to be close to that. If it does plummet, we could see maybe it hanging out here for a while, and yeah, we'd like to just go ahead and catch that movement, right? So 23, maybe 22.50, 22 at like the minimum. 22.50, I like that. 23 is only what, $20 more. Okay, so this is where I was talking about. Now, we picked 23. Let's say the price comes down a whole dollar. Where would we be? Not bad, not bad. So yeah, you see the price jumped up about 50. So, that's doing that real quick will give you an idea maybe sometimes of, profitability real quick. And that way you don't have to go do the calculator, right? So getting one contract July 25th, a $23 put at $118 absolutely sounds great. Let's go ahead and just make it 120 just in case. That way we get the fill. Cool. So throughout the week, we'll come back and we'll keep testing this. Hopefully when we wake up tomorrow, we get a nice 30%. And we'll close it out. And yeah, we'll talk about it tomorrow. So, guys, that's how we do the swing trades. Like I said, 70% success rate on these. It worked out really, really good. Spend some time testing them, though. Never, just jump in blindly on any kind of play, okay? All right, so and then the last one was Ollie, boom, boom, boom. It's just an earnings play. Okay, cool. So yeah, this is how I do those. And yeah, we're going to move right on to the straddle. So we're being a little long-winded today, but that's okay because we're not running the credit spread at the end of the day. And we're going to talk about it here in just a minute. So the very last thing that we do before the credit spread, however, the third section of the day is our straddles. So what we like to do is we like to do economic calendars. We like to do SPY. We like to, because SPY is great volume. That's the same thing we've been talking about the whole day. And we like to do about 3 strikes away. So is every economic event going to get us in the money? No. And let's talk about it. So we did 3 straddles. We did a straddle for PPI. We did a straddle for the international trading goods. We did a straddle here for personal income and outlays, and we did the jobless claims. Now, every single one of them at the opening bell the next day were losers. But if they were properly managed throughout the day and the calls were closed when the call momentum looked like it was running out and the puts were closed when it looked like the put momentum was running out, you can see that there was some very good profitability in these, okay? So if you've never played these before, all you're going to do is you're going to go to your Robinhood and you're going to add to your watch list at the end of the day, 3 strikes up, 3 strikes down. Get yourself a call, get yourself a put. Adding it to your watch list will allow you to watch it the next day without having to watch it the next day. You could actually go back at the end of the day and look at where the crescendo was and where the lows were and get an idea of what the profitability was. So if you guys are working, if you're the blue collars and you're having a hard time being here at the opening bell, just go ahead and test these for now. And that way, when you do have a day off and you're able to play them, you'll feel really confident about playing them because you've already seen the profitability in action. All right. So right now, let's go ahead and just take a look at SPY. So what we'd be looking at, and if it's in the middle, 3.5 strikes is okay. So if we end up like right around 55, 48, 50, you could go 3.5 strikes on either side. Okay. But let's say it was 548. We would be getting a 551 call and we'd be getting a 541 put. So at the end of the day today, I'm going to go ahead and add those, and we get them in like the last 5 minutes. And that way you don't get caught up in any last minute motion. We really just want to see what the economic calendar does. Because by testing these after a while, hopefully what we're going to find is certain economic calendar days that are more profitable or create more of a swing than others. And that way you're not just blindly playing every economic day. You'll actually have certain days that you have found that just are more profitable for you long term, right? So tomorrow we got the industrial production at 9:15 and we got retail sales. Now the problem with two is sometimes they work against each other. Sometimes one's kicking it one way, one's kicking it the other way, and they end up doing nothing. Well, on the days where they end up doing nothing, we basically have a situation like where we were last time. So on this day, 6/5, a little over a week ago, right around 2 weeks ago, we went ahead and took this trade. And throughout the whole day, we really didn't make much. It just kept trending sideways. Now, normally I'll watch these throughout the next day to see if maybe that was the day but when you're testing, it's easy to do that. When you have money in the game, it's, hey, you don't know, just take your profit, right? So, with, it moving sideways, you can see how it really didn't hurt it that much. Even at the opening bell, the price was good because we do 3 days till expiration too. It's not only 3 strikes, it's 3 days to expiration. So you have that extra day to like consider what you want to do before it really starts getting hit by that last minute time decay, right? So, you can see that if it moves sideways, you just lose a little bit. But if it does go parabolic in one direction or the other, you could do very, very well, right? So we can do this for SPY. We can do this for large cap earnings reports too. You can absolutely do this for earnings reports. I had a buddy the other day who watched this stream and who added those to his watch list, and he woke up the next day and was like, "Oh my God, I would have made so much money." So, test these things with using the earnings reports, but you can't just do any earnings reports because of the option volume issue that we've been harping on this entire stream, right? So, I've seen it. The option volume can disappear quite quickly if it moves far one way or the other. So, you want stuff that always has good volume at any strike, and stuff that you're going to be able to get in and out of. So, what we're going to do is we're going to wait till the very end of the day, and then we're just, like I said, we're going to get in either 3 strikes, 3.5 strikes away, 3 dates till expiration. Make sure you give yourself an extra day, and just go ahead and add it to your watch list. It's usually about here you could see. Lately, it's been costing us about 250-ish to 300-ish. So right around 125 a contract to maybe 150 a contract. Usually, it seems to be where we're at. But right now, we're at all-time highs. It really, the put contracts should be a little bit lower than they're supposed to be. The call contracts should be a little higher than they're supposed to be. There's a lot of metrics that come in when it comes to volatility. So VIX, you guys can learn about that. Absolutely look that stuff up. So guys, the option swing that we went ahead and took today, remind me what it was. It was HIMS. So yeah, we're going to go ahead and log HIMS here at the end of the day. The straddles, we're going to log the straddle at the end of the day, and then we're going to watch it tomorrow. We're going to talk about it tomorrow at 3 p.m. Be here. We're going to go over the straddle and see how that did. And then the very last thing that we're supposed to do every day, guys, is the credit spread. Now, the credit spread's amazing. It's a version of selling options. It's super consistent. It's 90% success rate. If you guys have never sold options, or if you don't know anything about credit spreads, I did a credit spread masterclass. The video's here on Tradecaster. The video's also over on YouTube. So check that stuff out. I've actually have a user right now. His name's Jerhoff. Well, his username is Jerhoff, and he's found 100% success in the last couple weeks that he's been running it. So, definitely there's a lot of juice on those berries, as I used to say, but this isn't something we're going to be able to run every day, guys. And let's talk about why. Well, just now when we talked about the straddle, I was telling you guys that the call options are inflated and the put options are deflated based on today's movement. Well, those are one of the hardest days to possibly trade this system, and I'll tell you why. Because when we get in where we get in, we have a stop loss of about 200 to 300%. Well, what happens is if you get in up here, the contract is so inflated that all it takes is a little bit of movement that direction to inflate it even more, because the speculative movement of the day has created this unreasonable expectation for the options. And when it starts moving in that direction even more, it's going to think to itself, okay, here we go again. And it's going to expect another big rip like this based on pricing and how it works. Okay. So what I have found is that when you jump in on a day like this, it only takes a little bit of movement to stop you out. Okay. So what's going to happen is on the low side, we're not going to be able to get where we want to get. Let's say there's a line right here for the, where we've seen it bounce a few times. And let's say we want to sell our option over here so we're nice and safe. We're not going to be able to. Well, earlier in the day we could, but running it the way we run it in the last 30 minutes of the day, looking for a 10 or 15 cent strike, we're not going to get it. Unfortunately, we would have to come probably way up here. And by the way, we do this on SPX, but it's all the same stuff. Okay. We would probably have to come all the way up here to get a fill. Now, being this close is the same thing as the other side, as the inflated contracts. It's going to create a situation where it only takes a little bit of movement back in your direction to make the option think, oh wow, he's going to be in the money. Let's inflate the value of this contract. And by them inflating the value of the contract, you hit your 200 negative 300% so much quicker. So on one side, it's already inflated and it only takes a little bit more movement to make it pump even higher because of the movement of the day. And on the other side, you can't get filled where you want to get filled. That makes you have to come closer and closer and closer. And that closeness will make it to where you end up hitting your stop losses more often. Make sense? So we avoid a lot of different days. If tomorrow's a big swinging, I lost it. If tomorrow's a big swinging economic calendar day, like I honestly don't know retail sales and industrial production. I just don't have them on the list, and I don't necessarily remember. If they are a big swinging day, then option spreads at the end of the day when it's going to be volatile like that are scary too, because some people might come in here at 345 350 and get set up and get ready for the next day. We've noticed that on FOMC, right? On the FOMC days, we've noticed that people will go ahead and just flood the options with more volume, with more volatility at the end, or more volume at the end of the day. So we want to go ahead and avoid economics calendar days sometimes, especially FOMC. We don't trade the night before, the day before. We don't trade the night before. Those are 2 days we do not touch. FOMC, PPI, CPI, same thing. Those are the days that crush this system. If you avoid those days and you avoid days like this where we're at all-time highs or the price has done nothing but go completely parabolic the whole day, then you guys should do okay. If it went parabolic and it went back to consolidating like what you see here on the screen, I'd be cool with jumping in right now, like how it's starting to right now, but I would want to see a lot more of that before I felt really good about jumping in. So, guys, all-time highs, economic days, just really crush these spreads. So if we want to keep a 90% success rate and we want to double our account every couple months, which is what we're trying to do, I plan to scale this to $1 million. I plan on taking this system right here from $1,000 to $1 million within 3 years. I've done the math, I swear, like a bajillion times. And it absolutely, the math is mathing. It's scalable, it's possible. The only real problem that I see coming into play is that when you start playing a lot of contracts, sometimes you can't get fills and exit where you want. And there might be some issues with that once I get up to, hundreds and hundreds of contracts. But, for right now, taking 1,000 to 10,000 over the next year, that's what the plan is. If you can double your account every 3 months, do the math, you're going to add a zero to your portfolio every year. So take 1,000 to 10, take 10,000 to 100, take 100,000 to a million is the 3-year plan for credit spreads. And I'm going to do it right here in front of you guys every single day. So I got my money, I'm loading it up. I'm actually starting with 2 grand because you have to start with 2 grand, but I'm loading it up. I'm ready to go. And I'm just really excited to take this journey with you guys. So we're not trading. With that, I'm going to go ahead and end the show. If there's anything that you missed that you want to go ahead and recap, just go ahead and check it out over there at YouTube. If you don't get a chance here. And guys, I just want to thank you very much for being a part of this journey. We're going to keep plugging away at these things, and we're going to keep finding some gold.